Hi friends, welcome to Tally with Practical Accounting. So today our topic is Contra Entry. So before we make entries into the Tally, so let's understand what the Contra Entry is all about. So Contra Entry means when both cash and bank are affected because of a transaction. So there are three scenarios when cash is deposited into the bank. So the bank balance will increase and the cash balance will decrease. When the cash is withdrawn from the bank, the cash balance will increase, the bank balance will decrease. The third scenario is when fund is transferred from one bank to another bank of the same business organization. So the fund which bank is receiving the fund will be debited, and the bank from where the fund is moving out will be created. So it is super simple to understand what the contra entry is all about. Only one thing you need to remember is who is receiving the fund and who is giving the fund. So in the first scenario, the cash is going to the bank, so the bank will be debited, cash will be created. Second scenario, the cash is coming from the bank, so cash will be debited, bank will be created. Third scenario, the fund is moving from PNB bank to SBI, so who is receiving? SBI is receiving and PNB is giving the fund, so SBI will be debited and PNB will be created. So let's go to the Tally and do the entries. First, we go to accounting vouchers. We change the date to 21/4/2020. So we are going to deposit 20,000 into the bank, cash deposit. So the credit will be cash. 20,000 is fund. We are depositing the fund into the SBI, so SBI will be debited. Paying the amount of rupees 20,000 deposit into the bank. Now let's go to the balance sheet and see if that entry is posted. So what happened here is initially we had 50,000 rupees in cash and we have deposited 20,000 into the bank. So now if you look at this, the cash balance is now 30,000 rupees. So where that 20,000 rupees has gone. So if you go to the bank, to the SBI, we can see the same entry on 21st. So what is happening here? So only the amount is changing within the current assets. So when we deposit cash, the bank will increase. When we withdraw cash, the bank will decrease. So let's go to the second entry. We're going to withdraw cash of rupees 30,000 from SBI on 25th of April. So let's go to accounting voucher. First change the date, 25/4/2020. So we're going to withdraw cash. So the cash is coming from the bank, so the bank will be created. So friends, here only one thing you have to remember: who is receiving the fund will be debited, who is giving the fund will be created. So here we are withdrawing cash, so the SBI will be created for rupees 30,000. And it's cash coming in. So check number is 201 245. We have to give a check to the SBI for withdrawing the cash for record purpose. Being the amount of rupees 30,000 withdrawn from the bank. Now let's go to balance sheet and see the changes. So now again it's 7,50,000. So if you look into the transactions of the cash book, you can see that initially we had 50,000 rupees, then we deposited 20,000 into the bank, and then we have withdrawn 30,000 from the bank. So now the balance is 60,000. Now let's do the third entry. 27th of April 2020, 2 lakh rupees is transferred from PNB Bank to the SBI. So let's go to the balance sheet and check the current assets. Now SBI has 1,90,000, PNB has 5 lakhs. Accounting voucher, change the date, 27/4/2020. So this is the third scenario where the fund transfer is happening between the two banks, from the PNB Bank to the SBI. So who is receiving the fund in this case? The SBI is receiving the fund. Who is giving the fund? PNB. So PNB will be credited. Two lakhs. Debit would be SBI. 2 lakhs. So check number is 301,256, being the amount of rupees 2 lakh transferred to SBI. So in this case, we can easily transfer online transfer from our bank, from one bank to another bank, but it is always advisable to transfer through a check, through RTGS, for the account record purpose, so that for audit purpose, internal audit, for AG audit purpose, that is always, it is better to transfer through RTGS, so that we have all the records that for the business purpose we have transferred that fund within the same bank account. Okay, now let's go back and check the balance sheet and see the total amount of the balance sheet is matching 7,50,000, 7,50,000. There are no changes in the total amount, only changes are happening within the bank and cash. So earlier PNB was 5 lakhs, now it has 3 lakhs, 2 lakh has gone to SBI. Now you can see the transaction here also. So SBI has received 2 lakh from PNB. So now friends, I can make it more simpler for you guys. Let's take an example of our real life. Suppose you have 50,000 rupees. Let's go to cash. Suppose you have 50,000 rupees at home. Now, if you deposit 20,000 into your SBI account, suppose you have a SBI account, so your cash balance will decrease, your bank balance will increase. Similarly, for the business organization, the same thing is happening. When you withdraw cash from the bank, your cash balance will increase and the bank balance will decrease. So there is no rocket science. It is not difficult to understand. It is very simple to understand. Suppose you have two bank accounts. One is SBI and one is PNB Bank, and you are transferring from one fund from one bank to another bank. So what will happen? So the balance in the PNB Bank will decrease by 2 lakh rupees. SBI will be increased by 2 lakh rupees. So only thing to remember in Contra Entry is that these transactions are not outside the business organization. It is within the business organization, and the transactions are happening cash to bank or bank to cash or between two banks. So very simple to understand, and that's all about Contra Entry. And thank you so much. So very soon we are going to upload more videos with the practical examples like this. And thank you for watching.